Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro nightly update for March 4th, 2025. Well, yesterday I called mine market sell-off on tariffs and growth concerns, and I just added the word again, and then the AKA, markets don't like trade wars. Now, good news is, if you look at after hours, markets are actually trading up. I think they traded down hard into the last 30 minutes today, concerned about the president's speech this evening. I've just actually got to go to sleep, and he's been speaking for close to 2 hours, so I thought I'd do this before I go to bed. He hasn't said anything that I think has killed the market. He talked about the benefits of tariff, paying off debt, and all those things. And the market seems to be holding up well. But I think the reason it's holding up well is after hours, there was talk that he might defer some of the tariffs that were going to be coming on Canada and Mexico. And I think the market likes that. So we'll see what happens. Maybe we'll get our bounce and rally on Wednesday. And the question is it something substantial or is it a dead cat? As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education and not considered investment advice. The intent of all my videos is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy, sell, long, short, any stock I mention. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools in multiple platforms, and I just launched and will be having a webinar, which I'll mention shortly, tomorrow at 8 p.m., Wednesday at 8 p.m. Hope to see you there. And I could show you how I've been able to bring the work that I've done and learned from many smart people over the last 30 years in the market, and I've been able to bring it to sort of a simple tool to shorten the time that I have to spend away from the things that matter, like grandkids and other things. If you're looking for the wealth charts video, I put those out at stocksanddocs.com. And yes, I actively still use wealth charts, and I find it adds a lot of things beyond my tool. And I do a morning video, which sometimes I cheat and do the night before, like tonight, and it's posted at 8:30 in the morning by the good folks at becomeabettertrader.com. But one thing I really like about wealth charts is the stable of educators and speakers that are regularly interacting with the audience and the membership, way beyond just a trading platform. So still out there. Also want to call out my Orange County meeting, which will be June 6th to 8th. It will be $300 to $400. If we saturate the room, which we usually do, then we'll consider an internet option. And it's a great time. It's low budget. There's no meals, although the hotel gives a free breakfast, but we go out as a group for lunch and dinner. And it's just been a great time over the years. I'll speak probably 50% of the time, and you'll have some other speakers as well. Greg Mills at gam72054 at AOL.com is the host of that. If you haven't joined my top-down trader group, why not? It's free. It's not for solicitations. I don't ever anticipate charging you, but I've only put these videos up on YouTube this week because I've got some webinars. Normally, I just do them for my stable of friends and family, and the only reason I went to a Google group is I got tired of all the spam notifications and my emails bouncing. So I think it's been a valuable addition to what I do. I'll probably be reactivating my Discord site before too long because it's a great way to share information as well. So more to follow, but I'll give you another reason to join my Google group. I've launched a new product called Market MRI Pro. Launch webinar number 2 is Wednesday. We had a great time on Sunday, but it was 9 o'clock on a Sunday, and I gave no notice to anybody. It was an hour and a half long. I'll have the links in the YouTube remarks. If you join the Top Down Trader group, not only do you get the launch discount, but you get another discount as well. And if you own any of my current tools for TradeStation, Wealth Charts, specifically the Marketplace package, or TradingView, there's what I call stacking discounts that can reduce your cost from the list price by about $900, depending upon how many different products of mine you've bought in the past. It's always important to know the news and earnings after hours. We did see some big movers on Tuesday. CrowdStrike probably being the most important one. It sold off. Box sold off as well. What do we have on Wednesday? We got some retail with Abercrombie and Fitch. Those have been mixed. Editas, which is a cool gene splicing, DNA manipulating, future-looking company. MongoDB, Zscaler, um, a lot of a lot of different things coming out on Wednesday and the rest of the week. I'm still looking forward to hearing Costco. As I talked about it before, it's probably a buy even though it's got such a ridiculous PE. I just have been afraid of it, anything that has that forward-looking PE. But know your earnings, know your news, and let me take a look at the market. So this is introducing the Market MRI Pro. So I always leave this sheet on during the day. It is fed by real-time data, but what's the point? Most of the people that follow me are end of day, so I don't stream it. I don't use up your bandwidth. But if you just hit refresh during the day, it updates in a matter of 3 or 4 seconds. If we look, you just saw how fast it updated. If we look at what happened in the market on Tuesday, the VIX led up 2.66%. You could see the indices were variably down. The Qs almost flat, and they did turn positive for a while. And the Russell minus 1.13, Spider 1.18, the Diamonds minus 1.51. More concerning is they all finished in the middle of their range. None of it's at the top of their range, except even the VIX came off its highs. If we look at new high, new lows, those numbers continue to get bigger at the different time frames on the NYSE and the NASDAQ. And as I often comment, bull markets are not built on new lows. We're going to have to start seeing this turn around with new highs if we believe this market is going up. If I look at one-day change on the S&P sectors, interesting, technology was the least bad, down, but only down minus 0.08. What led to the downside with a pretty brutal pasting was financials, followed by industrials, and discretionary still weak. A little surprising to see staples sell off as well. If we look at the themes that were working, China, solar, uranium, social media, clean tech, cybersecurity, gold miners. And I like watching this during the day just to get a sense of where the money's flowing into and not into. And it gives you 1 day, 5, 20, 50 day change and where it's at in the closing range for the markets on that given day. And then this is super powerful. What this does is it looks at 3 markets, S&P 1500, NASDAQ, and NYSE, and it tells you in blue how many sectors were up. No sectors were up in the S&P 1500, 23% in the NASDAQ, and nothing in the NYSE. That's a pretty ugly day. 14% of the industries were up, 29 in the NASDAQ, and 12 in the NYSE. NASDAQ clearly was the leader, down the least. What percent of stocks were up? 21% in the 1500, 38 in the NASDAQ, and 25 in the NYSE. Why do I like this so much? I like that so much because it gives me different market interpretations, and if the markets start to change underneath the indexes, I may see firming up there before the market itself turns around, and vice versa. Let's go through my typical market analysis. We start with a timing brief, and this is a weekly chart. On this chart is my timing model, which is based upon the Bongo, which I developed with a number of other people back in the Ian Woodward days in Palos Verdes Estates. It includes a WMA with 30 periods. This is a weekly chart. And then down here is a band of the buy-sell signal. We were in a buy from November of 23, and we got by the barest of whiskers went to a sell signal back here in early January. And I was questioning it. We ran up to this double top and we've sold off. So it turned out to be it wasn't such a bad signal. The green line is a 3-month new high, new low. And when it gets to do these things here, with the big pullbacks, it's usually a time for a reversal. We're getting close on the Qs, but we're really not close anywhere else. So we're in a sell right now in all 4 of the major indexes on a weekly: Spiders, Qs, Russell, and Diamonds. Now, the diamonds is only this week, and this week doesn't close until Friday, so a little premature. I'll look at daily signals as well, and you could see that we are in a sell on the dailies. And it's interesting because these are not lines that I drew today, but we kind of pull back to targets on the spider, the Qs. Russell, forget, that just destroyed, and the diamonds broke through my target. But there are reasons that I think the market's setting up for a reversal. And I'm going to go to that reason right now. This is my bucket analysis. I take all the stocks in the index, I look at their percent B, and I have 10 deciles starting here at 1 and ending at 10, where we put the stocks in the buckets based upon their percent B. And then we have a bucket to the far left, which are stocks below the Bollinger Band, and to the right above the Bollinger Band. In a bull market, most stocks will be from the midline up in the Bollinger Bands. In a bear market, they'll be from the midline to the lower band. I look at the buildup of stocks below the Bollinger Bands. I don't normally do intraday commentary, but I did send out a message earlier. And the first thing I said out was, hey, and let's just blow this up. This is just a JPEG that I took early in the market at 9:46. So its market was open 15 minutes. Now the gray bar tells me where it was yesterday. And I commented, whoa, and this, we have 32% of the stocks in the NYSE are below their Bollinger Band. You can see 32. 35 of the S&P 1500 were below. 28 of the NASDAQ, and 36 of the Russell. And I said, wow, that doesn't happen often. We're probably getting close to a bounce. And then this happened. Of course, the bounce failed, but I think we're going to get the bounce tomorrow. And then we went to 38, 42, 42, and 33. And clearly, we're at a level where in normal markets, we bounce. Now, I also commented, we're not normal markets. We are not in normal markets. Why are we not in normal markets? Because we got all this trade war stuff going on. So maybe it's not going to bounce. Is there any data to say it can get worse? And that's the thing to make sure you're aware of. If I go back to 2007, or 2008, I'm sorry, and we look at what happened in the big bear market, you can't see it well there. Let's see if I can make it bigger. Hey, look at that magic. You could see we got 40, 50, 70, down to 50, 77, and then ultimately the market turned around. So even though we are at a level that's pretty significant, markets can still get worse. I don't think this is a normal market, and that worries me. I do think we're setting up for a bounce in the market on Wednesday. If we look at my market breadth tools that are built in, you can see here the NYSE and the NASDAQ look very different. The NYSE just broke hard through the 50 on the daily, while the NASDAQ broke through the 200. And when we look here, we could see we're pulling back on the percentage of stocks above the 17 in green, 50 in white, actually 20 in green, 50 in white, and 200 in red. And at bottoms, it looks like this, like this, like this. We're not there yet, but we're getting there, especially on the NASDAQ. Surprised it didn't bounce here, but pretty beaten down markets. And I think if there's any abatement in the trade war talk and concerns with Canada and Mexico, we're going to see a rally. What do I think that rally is going to do? Again, just guessing. But I think that rally is going to run up into resistance and fail and be another dead cat bounce. But I won't know that. No one will know that. If they say they know that, I wish I knew what they were drinking. All you can do is play the market you got. Right now, I think we're going lower, but it wouldn't surprise me to see some kind of a dead cat bounce in the market on Wednesday. And I'm not forgetting that Powell's speaking on Friday, and we have lots of employment data the rest of the week. If we look at the U.S. market ETFs, so let's look at them very quickly. The spider was kind of in a range here, and it traded down almost to the 200, which was my target, bounced back inside the range, If I had to guess, that's a reversal starting and it's going higher. Obviously, news can make a big difference. And again, I'm doing this, you could see at 11:12, while the Democratic response is on the tube. If you look at the Qs, they've been in a trading range in green, and similar to the spiders, crossed down below their 200, closed above. At the bottom of the range, a false breakdown might lead to a rally. A false breakout here led to a market pullback. So cautiously optimistic for a short term, at least a short term move. The diamonds less so. The diamonds look like they want to go down and test the 200. Now, how far is the 200? We closed at 425 and the 200's at 418. So it's 1.5% away. It could go there and bounce. It maybe won't go there. Markets aren't perfect. But I thought we'd bounce off this line here. I still think we're going to bounce and go higher. But again, it's all going to be based upon what we hear on the tariff story. If I look at the Russell, Russell looks like it's a faucet or a waterfall and just going lower. But we had a doji, long bar doji, which can be a setup for a reversal. It's certainly an indecision bar. And it would not surprise me at all. I don't think the drawing is activated here. For this to run up, yeah, it's not activated in this view, and retest the 200 and fail. So a lot of things tell me to expect a bounce. One thing that has me bothered is the VIX was up in the market. It was up 16%, but the VIX is nowhere close to this session here. And is this enough of a move in the VIX to say we're done going down? I mean, I'd feel better if at least it was high as this one here. So that goes against my thoughts of a significant bounce, or sort of builds the case that any bounce we get might be a bit of a dead cat. And then if we look at the dollar, this breakdown here is conducive to the market going higher. On the major commodities, gold is something I like, and gold moved up 0.87. Interestingly, silver followed the same script, was up 0.87 as well. I guess with a weaker dollar, perhaps. Oil, is this going to be a reversal? It was down a bit, like 0.01. A bit of a bottoming candle. It's in this area of consolidation. Maybe oil makes a stand here. Natural gas had a 5% move. Trade closed in the middle of its range. And then if you look at the 10-year and the 30-year, that's interesting. This looks different than when I did my wealth charts video. But the 10-year, let's check the date. We have an issue here. So I'm going to have point this out to Praveen that our commodities, all right, the 10-year stopped updating, but we are up to date on the 30-year, I believe, which was, nope, the last date it was on the 3rd. So I'll check into that. I really like getting the 10 and the 30. Don't know why they're not working. We looked at the daily brief, the buckets, the market breadth, ratio charts as a way to look at sector rotation. Now we saw massive moves in staples, utilities, healthcare, real estate rather, and healthcare. But you notice all of them had a red tail down. So despite the fact that they've been leading the way and it was another bad day, there was a bit of a rotation. Communication gave some up. What actually went higher? Technology went higher a little bit, and that's a counter trend. Industrials went up a little bit. For the most part, the market was down across the board. Bitcoin traded up a little bit, at least it looks like, versus the spider. Relative strength was up. So now I've probably confused you, but my view on the market is that we are at an area that I would not be surprised if we bounce. And that's based upon really the market breadth, the buckets, and other underlying things I look at. We also, on the spiders and the Qs, traded down to the moving average that I thought would be where we would bounce. So I'm expecting a bounce. Doesn't mean I'm going to get one. If we get a bounce, what's the bounce going to do? Does it go up to new highs? Or does the bounce trade into resistance and then break down for lower? And I'm going to bet there because I don't think this trade war problem is over. And just because we delay again Canada and Mexico doesn't mean we've ended the trade wars. Now, from a bottoms-up perspective, I'd go into the top-down view here and notice every one of the sectors is negative. If I look at, let's just do this, get how many, the industry groups, some of them were up a lot, but most of them are going to be down. So one could look at an individual sector perhaps, or one could look at individual industry groups. And I'm not going to do that this evening in the essence of time, especially I don't want to give anybody the sense that it's time to be bullish in this market. Technology was one of the leaders. All right, so let's look at technology. Gaming was up the most, followed by internet software, semis, and IT. So let's just click these four. And this is what top-down investing is. I'm looking at the leading sector, not so leading, but it was leading groups, and let's just look at two-day momentum on the sort. Let's just look at some of these. CACI, no. SAIC, no. These are things that have sold off hard, no. So we've had a bounce on a lot of things that have sold off hard. Um, this is probably the most interesting of them, but still below the 200. NetEase could be LDOS. Remember, technology's been down for a while. Now, IBM looks the most interesting. Big uptrend, pull back. I'd like to see it do something, so it's not really moving my cheese. So I would go through, nope, the list of stocks and see if anything meets my criteria. So I do that on a nightly basis. Typically, I will take the top 10 industry groups of the market and see if anything there is working. I can also apply what I'm going to show you on the bottoms up approach, which are a couple of specific trading systems. So let's take a look at that. If I go to the impulse side and I'm using the JAS list, and the reason you're not seeing a blue line going across is because we don't update it after hours except to make corrections. During the day, you're going to see a blue line going, and right now it's updated once a minute with real-time quotes, and we're looking at moving that to 15 seconds. So what I'll do here is just to show you the power of this, is I want to look for pullbacks in an uptrend. I want them to be more than $5 and 500,000 shares, and I'm going to start with a two-day momentum scan and see if anybody meets the criteria. So I click the criteria that matter. We start with 3,461. And let's see if we get anything here. Now, if something doesn't change, then it's because I did something wrong. So let's try this again. There you go. DRD, Dr. Gold. Now, I'm not sure this was my favorite gold stock, but you could argue it's got a bit of a bullish flag and a breakout. And then STE, I don't know this company, Steris Healthcare, broke above the 200. I don't like where it closed. Now, it wouldn't surprise me to not find a lot of stocks that I like on a market day like the session we saw. Let's take away that force, and let's look at something, perhaps the multi-time frame CPR buy, which is another independent system. And this one had one that I did like, and that was OKTA. And when you see a move like that, especially on a down day, the natural question has to be earnings. And you could see earnings came out on the 3rd. They had a 23% quarter over quarter change compared to the same quarter the prior year. This was a 68% survive, 6.85% surprise. Revenue was up 12.73, which also was a surprise. The market rallied. So this might be one to look at if the market rallies. I think gold goes higher, and one that I like in gold that wasn't here is KGC, and I thought I'd just show that to you, and then we'll say goodnight. And why? Beautiful uptrend, pull back to the 50, free parking, and broke out of a descending trend line. So I like gold. I think we have a dead cat bounce coming. Just be careful with your enthusiasm on buy, buy, buy. And then my stock of the year that somebody asked me in December what I thought was one of the best stocks for this year. And one of these days it's going to prove me wrong. I actually held it going into earnings, and that's C, and you can see it's hardly broken down with the changes in the market. And if you look at, you can see it doesn't look impressive here on earnings, but people liked their revenue, and what they also liked was their projections going forward. So those are some of the things that I'll be looking at in the market. Have a great session. And hey, two things. Why not join a free group where you get nightly videos, market commentary, and dialogue with other smart people, not just me? And I didn't say I was smart. And then why don't you join me Wednesday night for my Market MRI Pro webinar, launch webinar, and you'll see it'll be an education of how I trade and my tools, and then a focus on the Market MRI Pro. It'll be about 90 minutes. Look below for the link. And have an awesome night, and let's see if we don't get that rally. Don't know how far it's going to go, but I'm expecting one. Take care and good night.